Hi, this is Michael Adams for CEORoaster, and again we have a brand new company joining us. Yeah, it's Para Resources, trading on the TSX Venture as PBR, also trading on the Frankfurt market. The symbol on Frankfurt is 8PR. And joining me is Geoff Hampson. He's CEO of the company, and I got introduced to the company by a fellow investor, a friend out of Germany who invested in the company. And so I am Geoff to give us an overview about the company and what's coming up and what the investor can expect. So Geoff, thanks very much for taking the time to talk to me today. And as I said in my introduction, I was introduced to the company by a friend who's an investor. And so he had very nice things to say about the company. But maybe to start off, give us a little bit background about yourself.
Sure. Well, Michael, thank you very much for having me. And it's a pleasure to be here. I've got a fairly varied background as an entrepreneur and a builder of businesses. Over the last 30 years, I've built businesses in the construction industry. I've got a manufacturing business. I also have a contract mining business in Canada. And because of my involvement with construction and mining, I've always been also an investor and have been a board member on a number of different junior mining companies. We built a mine in Guyana in a company that I was the chairman of the board in a few years ago. This company is really started as a result of my involvement with that company in Guyana.
Oh, okay. So I think we just directly dig into the presentation. So, and then I will, as I said, if I have some questions, I will just interrupt you.
Sure. Great. Okay. Let's just quickly as a kind of an overview, Para Resources started out on the TSX-V as what's called a capital pool corporation, and we did our first major transaction on a property that we had acquired in Brazil, and this was back in about 2012 when the exploration business was in favor, and the property in Brazil was an exploration play. We invested about $2 million into developing a resource there, and we've been seeking permits to start mining on that project. But that's a long and arduous task. And so in 2015, we realized, myself and my partner realized what we needed to do was to find a way to generate cash flow in the near term in order to finance exploration plays, because the market was not in favor of longer-term junior exploration plays. Right. So we came up with a strategy that really has become the basis of our acquisitions in Para Resources. And the strategy is really quite a simple one in that we look for mines that are already existing and permitted, and perhaps they're small scale, perhaps they've run into technical problems, perhaps they've really just been poorly managed or didn't have capital. And so we've looked for opportunities where we can apply our capital and buy these mines that are fully permitted for a relatively cheap price. And we've looked for these mines in areas that we call highly prospective geological areas. Pretty simply put, we're looking for areas that there's gold. And often we use the presence of small miners, small artisanal miners, whether they be legal or illegal, as a good indicator that there's gold in the ground and that we can do further exploration to try and build that resource. So we have made a couple of acquisitions. The first one is was in Colombia. I'll tell you some more about that in a bit. And that was a mine that had been in production for 25 years. The previous owners had sort of run it into the ground, no pun intended, and they were steadily, reducing production, lots of mechanical problems. They hadn't invested into the plant, and so they were willing to sell it for a very good price. The second one is.
Let me ask you a question. Are you doing your acquisitions by cash or by equity or by a mix?
And so far, we've only done these acquisitions with cash, okay. And that raises an interesting point, in that my partners, myself and two other partners, Randy Martin and Glenn Walsh, we have put up substantial amount of our own capital. And mostly that's because we like the business model, but secondly, because the market for from 2015 until fairly recently, the market has not been really in favor of junior mining companies. It's been very difficult, as is evidenced by many other juniors, to be able to raise money. So we put our own money in order to get us to the point where we think we present a good prospective investment for other investors.
Okay.
So the second mine that we acquired is in the United States. Again, it was a historic mine in a very prolific mining district. It's in Arizona, in this area that we have acquired. More than 2.1 million ounces have been produced from these mines, and it has been operating up until last year, when the owner, who was in his late 80s, decided that he wanted to sell it.
Okay.
We were able to buy it for a very good price, and we're very pleased with the outcome there. Both of those have been paid for with cash. The third opportunity that we have is a letter of intent that we have to acquire an existing operation in Nicaragua, and that particular acquisition would be paid for with stock.
Okay. So let me so you started off with the one in what was that? Let me just go back.
Colombian one.
Right, you started off with the Colombia one, and then just recently, because it says August 2017, so that was just last month, you acquired the one in the United States, in northwestern Arizona. And the third one, which is on your table, you are in the stage of having a letter of intent. And this acquisition, like the third one, will be as an acquisition by equity, while the other two you did prior to that, you did them by cash. And I totally understand the reason. Yeah, the market was in a very bad shape, and it was not easy to get financings, and it would have resulted in a high dilution for your shareholders. And you don't have any interest in a high dilution because you are the main shareholders.
That's correct. I mean,
okay,
between
cool.
the three principals, we own about 70% of the company.
Okay, great. That's a large number.
And I think that this is something that really differentiates us from the typical junior mining company, in that most junior mining companies, the management team is raising money from the outside in order to be able to finance the business. In our case, the management team has put up their own money, and that, I think, is something that should give comfort to shareholders, because I mean, we're in this thing for the long run, and not only have we put up about $14 million of our own cash, but we've also entered into a pooling and a lockup agreement. So because all three of the major shareholders have agreed that this is something we want to build over time, and we don't want one of the partners selling shares, into the marketplace when the other guys are still in. So we're in this together.
Okay. And
so we have a very...
Sorry, and besides the three main guys that are probably here on the slide, do you also have institutional investors involved, or is the rest of the company spread out to retail investors?
It's about the float is about 50% institutional or family offices, and the rest is individuals. Okay. So the institutional side of it is quite small at the moment, but we're in discussions with people to start, accumulating positions, because we're now, at the production stage, and this is when the institutional guys really take interest.
Right.
So just quickly to run through the management team. I mean, I talked briefly about myself. I've had a lot of experience in different companies, and particularly in the heavy construction. So I know the mining business, and I've sat on a number of different boards of mining companies as well. Randy Martin is a very experienced mining engineer. He has started up and operated and then sold 3 different mines in his career, all 3 of them in Latin and South America. One he sold to Yamana, and the other one he sold to B2, and the third he sold to Colombia Goldfields. So he is very familiar with the Latin and South America environment, and has a proven track record of being able to bring these projects into production make them profitable, and then sell them at a very big multiple of cost. Ian Harris is newer to the group. He's joined us in the last 6 or 7 months, but he is also a mining engineer. He's a very good hands-on guy. He's really good on the operations side. Before he came to us, he was CEO of a mining company in Saudi Arabia. After 3 years of being in Saudi Arabia, he wanted to get back to his family. He speaks Spanish fluently, has done a lot of work in Latin America, lived in Ecuador for a number of years as well. So very, very good addition.
I just forgot that we have a common friend. It's Janice from Gold Source. Because so I did a number of video interviews with Janice already, and anyway, so just it's a small world.
Yanni is on our board.
Right.
He's also a friend of mine, and I was the chairman of the board of Gold Source.
Right, cool. Small world.
It is a small world. Well, in the mining industry, everybody seems to know everybody anywhere. So our VP of exploration is Paulo Andrade. Very experienced senior engineer. He's had a number of discoveries. He's also worked for some of the bigger mining companies as a production geologist. So brings a lot of experience and knowledge of South American, in particular South American narrow vein mining. James Taylor has been my CFO in various companies for 27 years. Very, very capable CPA. And then Roberto Fuego, he's our expert he's a metallurgist in production flow. So he runs the mills, which are just as important as getting the ore out of the ground as how you get the gold out of the ore. So we have a very well-rounded and experienced team. So as I mentioned, the strategy is really to acquire these small operations that can be rehabilitated or upgraded or enhanced in some way. And so we have a number of different projects that we're looking at today because we think that this model works and we'd like to continue to build on it. But what we really want to do is make sure that we end up getting the proper amount of the mineral rights and have a mill that is properly suited and sized to that prospect. And so while we're a producing gold miner, a lot of our future value is going to come from the exploration that will result from further developing the properties where the mine is.
Geoff, are you going to stick around the Americas, or are you also looking into other continents?
Well, we're location agnostic, with a few exceptions. We're not particularly keen on Africa just because of the security issues, and none of us really want to travel there. But we have we did look at something in South Africa, and we've looked at something in Kazakhstan, and we've looked at a number of things in the Americas, including Canada. So it's really whether the property fits our criteria rather than where the property is.
Okay.
So the idea here is that we believe there's exploration upside on all of these properties, but in order to be able to understand what that is and to quantify it and to do the drilling, we want to be able to generate cash flow in the near term to support that exploration project, so that even if we're unable to identify a much bigger deposit, cash flow positive mining operation, which gives us a good return on our investment.
Okay.
Now, we in Colombia, we are using the small scale miners, and this is both a challenge and an opportunity. And the reason it's a challenge is because a lot of these miners are illegal. And so when I say they're illegal, is that they are on the property, they're mining, typically at the surface or near surface, but they don't own the mineral rights. And so most companies, mining companies, would see these guys as a threat in that they're stealing the gold from their property. We, however, look at them from a slightly different perspective. We, one, as I mentioned earlier, see them as an indicator of the presence of gold. But secondly, we see them as partners. And so what we do is we go and we formalize their arrangements with them, and we go to the government and we get permit for them to mine the ore on our property. And that's a very short time to get that done. But the benefit of doing that is that it creates social peace, because these guys are, living in the community. It's good for the environment, because typically they're making they're extracting the gold using a mercury amalgamation, and then they throw the mercury tails into the river. In Colombia, there are 300,000 illegal miners, and Colombia also, not by coincidence, has the highest degree of mercury poisoning in the world. The government is very keen on resolving this issue. The other thing is that from the small miners' perspective, is that they actually make more money when they sell their ore to us. So we go to them and say, you're working on our property. We want you to continue to work, but rather than extracting the gold yourself, we want you to sell the ore to us so we can process in our mill. That way we have these miners bringing us the ore. And the economics of that are very good. So they get 50% of the gold that they bring to us. When they use mercury, they only retrieve about 32%. So they're making more money.
Okay.
The government, of course, likes it because they get the royalty as well, and these guys become formalized. They become part of the legal economy. So it's a really a sort of a win-win situation. Right. That many people have come to us and asked us to help them replicate it in other parts of the world. Okay. We're not interested in doing that unless we have an economic interest. But it shows you that this is a very good way of working with these miners.
Okay.
And so when I said the economics are good, I mean when we buy the ore from them and we pay them 50% of the gold that's in the ore, our cost of producing an ounce of gold is $743 an ounce. That assumes $1,200 gold. Now gold is a little bit higher, so that means that our cost would be slightly higher, but still the margin between the selling price and our cost would get bigger as the gold price goes up. So this is a very, economically speaking, this is a very, very good deal for us as well. And of course, I mentioned the environmental and social benefits, and so we get the support of the government, we get the support of the local people. The environmental people are happy. We have groups of people from the World Bank and from USAID who are helping us to bring these guys into the formal economy, because it is such a good deal for them and for the environment.
Okay. And what has been the production numbers?
I'm sorry, the production numbers from who?
Yeah, from like what they brought to you, and then you produced gold.
Right.
Because you said you are in production.
I'll cover that, but they're at the moment we're buying about 150 tons per day of ore from them.
Okay.
And we're mining 75 tons per day from our own underground mine.
Okay.
So when we bought the El Limon mine, we paid $5 million for it. And the way we paid for that was $1 million down, $1 million note, and then a royalty which caps out at $3 million. So the purchase price was very good. But the mill was 75 tons per day, and it was in really bad shape. So we've now invested about $7 million of additional capital into doing two things. One, upgrading the mill from 75 tons per day to 225 tons per day. Secondly, we have completely rebuilt the flotation and the cyanide circuit, so all of the inside of the mill is new. And then we also bought the mineral rights for 22,000 hectares of land around the mine site, where all of these small miners have been traditionally mining. So it took us about a year and a bit to do all of that. We recommissioned the mill earlier this year. We had a few mechanical problems with some of the parts that were brought in, so that delayed us by 3 or 4 months. But we've now just in the process of starting to ramp up production. So we are producing gold today, and we're producing it at the rate that we expect. but we're just only running at about 40 tons per day on a 225 ton per day capacity. So over the next 3 or 4 months, we will ramp that up to the 225 tons. We expect to be at full production by the end of the year. And
okay. Is there some guidance for the full year 2018 in number of ounces?
We are predicting that in 2018 that we will produce around 18,000 ounces.
Okay.
It might be slightly more, and I can kind of explain why it might be more. We have assumed an 8 gram per ton head grade, and as you recall, we're mining 75 tons per day of our own mine and buying 150 tons a day from the small miners.
Right.
But when we mine underground, we use what I would say is conventional mining methods, meaning that we drift our tunnels that are quite big enough to accommodate an electric train with water and air and light. These small artisanal miners, they don't worry about that kind of stuff. And so what they're doing, because the veins are about 1 meter in width, and we have to take a much bigger width than that in order to be able to get our personnel in there, we have a dilution factor about 2 to 1. And so the small miners, because they're getting paid only for what they bring to the mine, they hand select the ore that they're mining, and they don't take as much waste material. So what we're finding is that the grade that's coming from the small miners is higher than what we're seeing out of our own mine, even though they're mining exactly the same formation. So
okay.
We think there's some upside potential to those volume numbers.
Okay.
So now I mentioned that we always look at these things from the perspective of what is the exploration potential. That's one of the criteria that we establish. And you can see from this slide that we own a fairly big piece of land, the gray area that's called the O2 property, that we acquired, and we acquired that separately from the El Limon mine. But what's interesting about this property is it's 12 kilometers long, and all along the valley there are a series of parallel veins. And geologically, those veins are exactly the same as the vein that is being mined at El Limon. And we have gone and we've pulled that vein system because there's all these small miners and we can get in there and sample the vein. And we see that it is exactly the same. So the geologists believe that this vein system that runs up the valley all was created at the same time, all occurred from the same geological event. But over time, there has been some cross faulting. So it might go for a kilometer and then stop, and then offset by 500 meters, it starts again, and then so forth. So we believe that in the mine that we have now at level 7, which is 450 meters in depth, we still are encountering that vein, and we know that vein continues up this valley. So the exploration potential is that we go and we drill to identify whether this vein continues all the way up at depth. And if it does, then we have a sizable deposit here, because we can extrapolate that we've taken 500,000 ounces out of the El Limon mine, which is just 1 kilometer section of a 12 kilometer long vein.
Right. But
the rest of that 12 kilometers has never been drilled. So that's where we see the exploration upside.
Okay.
And now, in 1997 and 1998, the previous owners did a very small drilling program, and this chart demonstrates what they discovered. And I think it's telling to see that there was gold from the surface, and that the drill holes ended in mineralization. The holes were 68, 117, and 53 meters. But they encountered significant sections of gold. The 3 holes were 68 meters at 2.73 grams, 117 7.4 grams, and 53 meters at 4.47 grams. So what this means is that because it's at the surface, this is very different from a vein system. This is some kind of a disseminated deposit of some kind. Now, 3 holes in a row don't really tell you very much, because you don't know whether it goes, how wide it is. So our plan is in the last quarter of 2017, we're going to go and we're going to duplicate these holes, and we're going to do an offset by 50 meters to see whether there's any volume there. But this is the kind of information that would lead us to believe that we have a much bigger system at El Limon.
Right. Okay.
So at the moment, I mentioned that with El Limon that we're in production. So we're producing today about 100 ounces per week, running at about 30% of capacity. And so we as we ramp up that capacity, we will be producing more gold, and we break even from a cash flow perspective at 400 ounces per month. So we're at cash flow break even today.
Okay.
And as we increase the throughput, we will start to see positive cash flow. So in the coming months, we will be generating positive cash at El Limon. So this is a very important sort of tipping point for the operation, because on one side you're having to put money in every month, on the other side there's money being generated every month. So we're very excited that we're here. It's taken us a couple of years, but we've now we're right on the cusp of producing cash. So
okay, cool.
Recently we bought the Gold Road mine in Arizona, and Arizona has been a very historically been a very big producer of gold, and this district, which is called the Oatman district, has had a lot of mining over the last 100 years. And in fact, the mine that we acquired, the Gold Road, it has on trend 3 other historic mines that were operated up until 1942, when the government mandated that they shut down for the war effort. So they have never been properly drilled, and they've never been reworked. But we have, in addition to the Gold Road mine, we have also acquired those other 3 properties. So we now own an area of patented claims that have 4 historic mines where more than 2 million ounces have been extracted, where it's open at depth and open on strike. So there's a lot of exploration potential here, because they've never been drilled between these mines, even though they're all 4 in a row. So it's a very interesting opportunity. This diagram shows where the mining has been done. So the gray area is where the previous mining has been done. The red area is areas that are ready for mining and have been blocked out. So all the development work has been done. All the production sampling has been done. This is what would be considered a proven category.
Okay.
Underneath all of that, it's open. So we know it's open at depth, and we believe that because some of the drilling has been done, there's about 90,000 ounces in the proven category and another 350 in the measured, indicated and measured and indicated. And we think that that's only in Gold Road mine, not including the other 3 mines that we have also acquired. So there's quite a big opportunity here to develop a bigger resource.
And what's your work?
This mine.
Sorry, how does your road look like for the next little while?
So for the first, we as you mentioned at the beginning, Michael, we just acquired this last month.
Right.
And so we now completed the purchase. We have transferred all the permits. Everything is now in our name, and we've hired outside consultants to come in and do a 43-101 report and a resource calculation, because we also want to do a PEA based on our mine plan. So we're working on the mine plan today. We think there are some things that we can do there that the previous management wasn't doing that will reduce the costs. But essentially, this mine, we could start mining tomorrow, but we want to make sure that we do it in a way that is going to maximize the benefit. So we're doing the analysis and the studies, and we'll be starting up production in January. So in the meantime, we've done all of our due diligence on the mill. It's a 500-ton mill. It's in very, very good shape. It's been well maintained. It ran at a 95% recovery only 12 months ago. And so this is something that we can basically turn on and be ready to go.
Okay. But still you will have some exploration going on the Gold Road project, right?
We will definitely be doing some exploration, because the opportunity to discover a much bigger deposit is real.
Right.
And on this slide, you can see that there's sort of an overview of the various mines, and you can see where the top and then the other mines that we have acquired in that same trend, and those red lines at the surface. And they've really never been properly explored. So we think there is a much bigger area play here in this region, and so that's why we've accumulated all of this land. But you can see that these mines have produced a lot of gold, and that the grade is quite good. You know, certainly, you look at Gold Road; it's a third of an ounce per, which is about 9 grams per ton. And United Eastern, had a 1.03 ounces per ton, which is about 40 grams per ton on average. So these are very rich veins, and as I said, they're open on strike and open at depth.
Okay.
And so we've done, the previous management has done a resource calculation. A little bit hard to see on this slide, but we believe that we have about 800,000 ounces that have already been identified, and the production rate would be somewhere around 50 to 60,000 ounces per year. So we have a 12 or 15-year mine life just based on what we already know, and we think, as I've just mentioned, that there's quite a bit of additional capacity. So this operation that we acquired for $7 million will generate somewhere around $13 million a year of cash flow in 2018.
Okay.
So I think, I mentioned 95% recovery of the metal. The mill is in very good shape. It's quite modern. It was built in 1997, and it's fully permitted with dry stacking tails and carbon in leach operation. So just to talk again about the exploration potential, you can see these are some of the cross sections of the various mines that have been mined in the area, and there's very little exploration that's been done in the middle, and there's a series of parallel veins, and often they would mine just one vein and not go after the second. So we have a lot of potential here that our geologists are excited to get in there and start to do some drilling to start building out the resource. Okay. The deal that we have in Nicaragua, the LOI, is an operating mill and mine. It's a 200-ton per day operation. It's currently generating cash flow, about $3.3 million a year of positive cash. It produces 1,000 to 1,100 ounces of gold per month. And we have acquired this for a purchase price of $6.5 million. So, but we're paying for that with the shares of Para. So while it's a bit dilutive to the shareholders, we're buying it for 2 times cash flow. And there's also exploration upside here. So we think this is very accretive to the company. It's going to add to the cash flow, add to the number of ounces, and I think will help to round out the company in terms of locations, country risk, etc. So we hope to close that in the next month.
Okay.
So our short-term objectives are, to reiterate what I've been saying, is to get to commercial production at El Limon mine in the 4th quarter. We describe commercial production as having 85% availability or 85% uptime, 85% of the gold recovery, and 75% of design throughput. So our schedule shows that should happen sometime in October or November. At which point that mine will be generating significant cash flow and good number of ounces. We're going to develop the mine plan and publish the NI 43-101 report and PEA for the Gold Road mine. We think that depending on how quickly we ramp up, we will be 35 to 50,000 ounces in 2018. At a full run rate for the year, we're capable of doing about 60,000 ounces. And then we're going to complete the drilling program in El Limon to twin the historic holes and to start to build a 43-101 resource there as well. We'll close the Nicaragua milling operation acquisition. And we have this property in Brazil that I mentioned at the very beginning, and it's quite small, and it's a bit of a distraction because it would only produce between 3,500 and 5,000 ounces a year. Okay. So we have entered into negotiations with a Brazilian company to have them joint venture that and have them take it into production.
Okay.
There's 135 million shares outstanding, 90 million of which are owned by the management and the insiders. We have 20 million warrants outstanding, of which 2.8 million are expiring this month, and another 4 million are expiring at the end of the year. Okay. Most of those are owned by insiders, and we are going to exercise those. The 13,500,000 warrants at 30 cents are as a result of the financing that we closed in July. Okay. Our market cap today is about $27 million, which is 1 time our projected 2018 cash flow. So it seems like a pretty good deal. And then the 3 main shareholders are Glenn Walsh, myself, and Randy Martin. And you can see, each of us has a significant number of shares that have gone into that lockup agreement that I mentioned.
Right. Yep.
So as far as financing is concerned, the construction at El Limon is fully funded. We don't need any more CapEx. We're at cash flow break even, growing into cash flow positive in the coming months. We have the cash on hand for Gold Road to get us through the 43-101 and the PEA. And depending on whether we need to spend any CapEx or not, we have enough cash on hand to finance working capital there. If we decide that we need to invest something at Gold Road to improve production, then we would have to look for financing either from the debt markets or perhaps from another financing of equity.
Okay.
So just in summary, I think we've got a really good, strong management team. We've delivered on what we said we were going to do on the acquisition of properties. In 2015, we said that we wanted to be 100,000 ounce a year producer by 2020. With these 3 acquisitions, we're going to be in the sort of 85,000 ounce per year range. So we're closing in on it. We have a lot of upside potential in terms of exploration, which will really unlock value, because if we are able to demonstrate that we have a couple of million ounces in the ground in one or more of our properties, that will greatly increase the value of the company. And we keep our overhead low. We've got we have an office in Miami, and we have an office in Vancouver, and obviously we have one in Colombia and Nicaragua as well. But all of those combined, the overhead is less than $200,000 a month, which for a company that is of this size is quite low.
Right. Okay. No,
I think that's it. And so,
okay.
Any questions?
No, maybe. So, first of all, if you need to get more information about the company, the website is powerresourcesinc.com. And no, not really questions. But I can give you my 2 cents. I think that you're really right now, with all the homework that you did in the last couple of years, going through a time in 2014, 15, 16, you did all the hard work, and every investor, and my main audience is the retail investment community. So every investor is now profiting from what you did over the last couple of years, right? And you're exactly at the tipping point. Yeah, you're starting to generate cash flow, and not only on one project. Yeah, because that's also something you have if it's a one project company, you also have the risk of this one project and this one country, right? So, but you right now already have 3 different countries, 3 different projects. All of them are in production, moving into commercial production, or will be in production in 2018, right? So your plan, as you said, is to have like a production of 85,000 ounces. In 2020 you're going to have 100,000 ounces, which to me sounds really reasonable. I'm as my subscribers know, I'm a big believer that the gold price will be way up. Yeah, we are talking about 2020 in 2020. Yeah, something like that. So and this would of course help you for your margin. No, I don't see too much downside in the company, especially because, as you said, yeah, a majority of the shares is held by the 3 main guys who are also running the show, and they're even locked up, right? So what I can see, that's what you kind of indicated, is that there will be some more institutions that will be interested in investing into this deal. But as most of my subscribers know, yeah, an institution always takes time to make a decision. Yeah, they want to go down to the project or whatever they want to do before they make a decision. Yeah, a retail investor just needs to press his buy button. So take a really close look at the information that's presented on the website. Bother Geoff with your questions, on email or on the phone, I guess, or some of the other team members, if you still have any more questions. But I really think it's a story that I'm going to follow, and it's really exciting. Especially going into the fourth quarter 2017, but even more so, the whole year 2018 should be really exciting for you as a company, but also very rewarding for all the shareholders.
Yeah, thank you. I couldn't have said it better myself.
Okay, cool. So thank you very much, Geoff. That again, I wasn't familiar with the company. I just got a quick hint of one of my contacts, right, to talk to you. And so I think I have to buy my contact a beer. Yeah, he deserves it because he made the introduction. The stage is yours for any final words. Yeah, especially to maybe the retail audience.
I think that now is a very good time to buy, because we have been, in the development stage, and as you said, we've taken, the money that we needed it to do. We've taken all the hard work to get us to this point, and the market hasn't figured out that we're almost there. And so I think that it's a good buying time. The stock is very undervalued, and we're just really getting started on an IR program to start telling the story. So I think that timing-wise, it's very, very good. And I agree that the price of gold is going to continue to go up, and that can only be good for mining companies. So
definitely. Okay. Thank you very much, Geoff, for taking the time. Thanks. Bye-bye.
Okay. Bye-bye.